Hello and welcome back to another daily recap. Today is Friday. It's August 23, 2024, quarter after 7 a.m. Eastern. And here are the levels that I've developed for the day. They're pretty spread out. I've just kind of noticed it's interesting most days this week, at least starting maybe on Tuesday. At this time when I'm working on the levels for the day, the pre-market is around 560. We're hanging out under that number now. And they've kind of started around that general neighborhood most mornings this week, and they ended up the same place by the next morning. So we'll see what happens today. There's what is this Jackson Hole Symposium wrapping up today. Jerome Powell speaks at 10 o'clock. That could move the market a little bit. Otherwise, it's a Friday. It's the middle of the summer. Things typically are slow. They could kind of just move higher unless something kind of unprecedented happens and moves the market. We'll see. But after the market closes, we'll come back to this chart to analyze any E-mini trades that may have resulted from the SPY reacting at these levels. Catch you on the other side. It's a little after 4:30 now. Market closed. Should be a pretty quick recap, mainly because I didn't take any trades. I mentioned the email that I sent out this morning that I would be pretty busy in the morning, would likely not be able to take trades, and I didn't even look at the market until about 1 o'clock. So they were over here somewhere and already messed around with this level. So let's talk about what you would have done playing by the rules. So at 10 o'clock, there was the Fed Chair Jerome Powell speech, the Jackson Hole Symposium, and that did move the market. And so if you took this trade, you would have taken it at 560.02. If you had kind of maybe ignored this consolidation, this doesn't meet the rule I have for a consolidation under the level for a certain amount of time. There was enough time, but they really didn't get close enough. So, I mean, this is, you think about this move from yesterday, they closed, from where they closed, they moved up, the gap, they're going sideways. That typically plays in the upward direction. So at 10 o'clock, I'm not sure I would have been in a trade, but we're just going to treat this like a process and say you would have taken the trade. Well, what would have happened? It wouldn't have taken too long to hit your max loss limit, 20 ES points out of the money. Now, there's another level up here. I'll talk about that in a minute. So you would have bailed out. So you would have given 20 points back, pretty big loss. And then that's on the way back down. If you wanted to take a recycle, enough time had passed from the time they got out of that level to the time they came back into it. And yes, you could have taken a long trade at this level or 5 cents added to it. And yes, they got below it. It might have felt a little scary, but they bounced. And that would have provided a good recycle trade, and then you would have touched this level for the rest of the day. So this lighter blue line here. So this morning, you may know that first of all, I do use calculations to derive levels, kind of serves as my baseline that I start to identify other levels from. Well, this morning, there was a handful, there was 3 levels up here. So this is one of them, this light blue line. And I put this dark one on because it was the midpoint between, there was 3 here. And I just went with the middle one. And I had other levels way below down here, below 550. So these 3 other levels were not even out of my calculator. I identified them in other ways. And as you can see, this was important, but unfortunately, it's just kind of got on the wrong side of it in this case. But so if I were trading today, I would have known about this level and I would have sold again. Most likely I would have held on to this one, knowing that I'm up here close to this other zone, if you will. And, a midpoint would have definitely given me a base hit if I'd held on to it. Could have been actually a pretty good day, but don't know. I wasn't there, didn't trade. And if you did take this level, you would have given some money back. It happens. I cover the good, the bad, and the ugly here. So this is not a pretty trade, but you could have redeemed yourself at least a base hit, maybe a little bit more on the recycle of that trade. So nothing really to see in terms of trades. There is no recording of anything, but we can look at the log. This is cleaned up a little bit. You notice that it says playing by the rules log. That's this sheet here. So level 4, max loss limit at the level plus a base on the recycle. If that's the way you chose to trade it, that's pretty much strictly playing by the rules. And unfortunately, there was, like, this level really wasn't even a calculated level. But anyway, it is what it is. That's the level I put out. Did not put the other one out. So, if you had the levels, you wouldn't have traded it unless you had identified it your own way. Same level was hit, but I didn't take any trades for mine. So you can see the averages and totals to date from playing by the rules log and then my own personal trades. So that's it for today. Not much more to discuss. Interesting week, and we'll be back next week with more levels and a better game plan. I'll talk about maybe some long-term things. So thanks for tuning in to today's recap. I hope you found it helpful. We'll see you in the next video on Monday. Have a great weekend.